Hey, this is Andrew Kuhn, and you're listening to the Focus Compounding Podcast, the podcast where Geoff and I talk about actionable stock ideas, timeless investing concepts, and the overall way that we think about investing at Focus Compounding Capital Management. Go to focuscompounding.com and enter in your email to get a free watch list from Geoff every other week. And be sure to check out all of our other work where Geoff writes about stocks at focuscompounding.com. I upload how-to investing videos on YouTube, and we both manage capital for investors at Focus Compounding Capital Management. Thanks for listening, and be sure to subscribe to follow along. Welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focused Compounding, the number one value investing podcast in the world, soon to be the number one YouTube value investing podcast in the world as well. I want that plaque on my wall, that YouTube plaque, 100,000 subscribers. We got 2,000 right now. Soon to be the number one YouTube channel in the world. Sit next to Geoff Gannon. Geoff, how's it going today?
It's going very well, Andrew. How's it going with you?
It's going great. Hope it's going great for everybody else. If this is the first time that you're tuning in with us, first off, I have to ask, what took you so long? Secondly, I got to tell you, check out all of our content. Go to Twitter, follow me at Focus Compound. Go to focuscompounding.com and be sure to sign up for premium research. Geoff is doing 3 free write-ups on investing topics a week, and then 2 premium write-ups on stocks. And if you want to get the free ones to your email box, join the Gannon Gazette. Go to our homepage, www.focuscompounding.com, enter in your email, and we are being religious about sending that out. Sometimes I get an email from people saying, I'm not receiving the emails from the Gannon Gazette, and I say, well, we haven't sent a Gannon Gazette in a while. But last week we did, and now we are going to every single Monday going forward. So be sure to sign up for that. In today's podcast, we are going to be going over the Stocks A to Z section on the website. So if you do become a member, the Stocks A to Z section, we just kind of changed the website up a little bit to simplify it. Is a list of all the stocks that have ever been written up on the website. So you could go through there. A lot of these ideas may still be relevant. We have the idea exchange where members could write up ideas themselves. We'll click that so people could see that. You can, takes a little bit to load for some reason. You could create a new topic and you could write up a post. Why is it not loading? The blog is where all of Geoff's posts go up there, and when I decide to write to, it will go on there as well. And then the Stocks A to Z section, of course, is what we're going to be going over today, and it has a list of every single stock that's been written up on the website, as well as your singular diligence write-ups. So Geoff wanted to actually spend this podcast going through it and seeing which stocks he thought could be potentially relevant. Obviously, there's been a lot of volatility in the market, and in one of our most recent podcasts, when we talked about watch list building and stuff like that, obviously, doing the work required when markets are hitting all-time highs is very important, because when there's volatility, you're able to act decisively. So we could just go from the top. If you want me to pull up a quick FS, I definitely can do that.
So
of
we
a lot
can
of
talk
these
about
companies.
A-Mark Precious Metals. So A-Mark Precious Metals is an interesting one from a speculative basis. I would not suggest this stock necessarily as being able to hold for the long term and predicted that way. But if we look, can we get a stock chart on these to see if they've declined much recently?
Yeah.
So A-Mark Precious Metals, in theory, should probably have gone up a little bit last week. I doubt it did. But when we're recording this, the previous week or so was pretty volatile, right? Down. And so if we look...
do a 1-year chart, or we could do year to date.
Yeah.
Since it's been more recent.
So I guess there's a little bit of a decline, not much. This company would benefit. So this company says that it'll benefit from volatility in gold prices and silver. I think that's 100% true. They kind of say that the absolute level of gold and silver doesn't matter to them. I'm not 100% sure that's true. I would say that the primary thing that matters to them is the volatility in the market. And then the second thing is that the higher the price level, the better for them probably, because they do lend against and stuff like that. So there are probably collateral calls and stuff on gold. And because of the way they do the margin stuff with them, people will lend pretty high amounts against gold because they're keeping it physically themselves, so they don't have defaults on it. So they probably had a lot where they had to take the gold. So things like that, they will make money on all the sorts of things they deal in making markets. They do physical gold and silver, so we're not talking about future stuff. But the movements in the market, if gold is very volatile, I'm just going to keep saying gold, even though it's gold and silver. If gold's very volatile, they'll make a lot more money this year. And so I think gold has been more volatile and had been particularly not volatile for a while. Just gradually going up all the time or gradually going down all the time isn't very helpful to them. So I wouldn't be surprised if they eventually report really good earnings if you continue to see volatility in gold prices. Has gold been volatile in the last 5 days? I would guess that it has been very volatile.
Oops. Let's see if we can find it. I don't have the Bloomberg terminal up.
It's just that I would guess that it's moved around a bunch in more than normal in the last few days or whatever. And so if that happens, if that continues to happen, then they would benefit from it. It's kind of like, imagine they were dealing in oil or something we know has moved around a lot. Then they would make a lot more money because they're basically a market maker and things like that. And these sorts of things, the spreads that they get are definitely tied to the total amount of volatility in their markets. So they benefit from higher volatility. That's kind of the argument always for buying them, is to buy them at times when gold is very non-volatile, because their earnings will look poor, and then actually make money when it's more volatile. The part of the business that I liked long-term is the secured lending part of the business, because that's just like charging high interest rates to hold gold for people that you then lend against. And that's a pretty good business. So they're basically, like I said, they're essentially like an investment bank for physical gold, like things like coins and bullion and stuff like that. So
Interesting.
Then the second stock there, I don't know if we can get a quote on that one, but that would probably be affected a lot. So that's Amadeus. So that's obviously tied to airline stuff. And some of their stuff, I believe, is tied to overall traffic levels. Like it's transaction based, sort of the way that like FICO is tied to the number of credit scores being done and stuff like that. So it's a very good business. I like Amadeus a lot as a business. Do you have the quick FS for it? You probably could find it for it to give people an idea of how attractive a business it's been historically. So if we look, I think you can see like the return on equity, what it's been, how high it's been.
Return on equity for those listening has been, the 10-year median return's 33%.
And it just doesn't have years where it's very bad.
Yeah, revenue has a 10-year CAGR going from $3.4 billion in 2010 to $6.2 in 2019.
And I think it's just generally like on an earnings per share basis, going to tend to have higher earnings this year than last year. So still, it's a 20-something PE?
24.
Yeah. But, so it also has very high conversion into free cash flow and stuff like that. This is a very attractive business. It's definitely something that I would watch if you were more interested in, I don't think I'd buy an airline if there was a lot of problem in the airline industry, to be honest, but I would buy something that might be connected to airlines. And if this falls like an airline, then this is a stock that you definitely want to read the report, read the write-up. It's not done by me, it's done by another member.
Amazon, you did that a while ago. We don't even go over that. Apple, who did that one?
We can just scroll through to the ones that we think matter. Yeah.
Arc Restaurants, that was written up recently.
Yeah, there's a lot of stocks on here, so we probably should just scroll to Booking. So Booking probably fell a lot, let's see. So Booking is now it's called Booking now. It was Priceline, but we can see that it was a very expensive stock, unfortunately. But it's dropped a lot, right? In year to date, it's dropped a lot.
Yeah, year to date, 2,100, and it's at a 15 times earnings.
So let's look at the quick FS thing for it. So Booking would be my favorite in that industry, I'm sure. Also not a write up by me though. That basically
returns are great.
Is an online travel agent, so it makes money by getting you to book hotel rooms through the website.
Yeah. 10-year CAGR gone from $3 billion in 2010 to $15 billion in 2019, but assets have also have a 28% 10-year CAGR. So are they acquiring a lot of things?
Free cash flow's grown by 25% a year. They've acquired a few things, but not a lot that have been very successful.
But the return on equity, I mean, the whole, business quality profile is very strong.
Yeah. So the risks then more like through advertising through Google and things like that, whether it'll be as effective and in getting them people to their site and then selling through for hotels. But another one that if it drops a lot, I'd be interested in. This is one that is potentially pretty attractive for a giant company, right? What's the market cap on it?
What is it, 20 or 71 billion?
Yeah. So it's a huge company. So I can't think of many $70 billion companies that I would like as much as Booking. So that's one to definitely read about and follow. Let's see.
BWX Technologies.
Yeah, that probably isn't affected much by anything. I don't know where the stock is trading on that one. They did have some problems that were their own issues, but I can't imagine that the stock fell much last week. It shouldn't have fallen really at all. Nope. Look at that decline. So it wasn't cheap though, but I'm not sure why you would have that decline. I mean, the Navy isn't going to buy any fewer ships because of that. None of their customers that I can think of is going to be affected by anything that happened here. So it's kind of a stock that shouldn't fall. That's kind of my point about if people own that and own other things and just want to get out of stocks, they may get out of even something like BWX Technologies when there's really no reason to get out of that.
What about Carmart?
Carmart is unfortunately not that cheap. Let's go look at it. I did a follow-up on it when it got cheap. I think it's recovered quite a bit from there. Yeah. It says $100 stock now. When did I write it up? What was the price? That's the problem. Well, you could, or at least do the follow-up. Yeah. So when I followed up on it,
$35 a share.
$35 a share. So I thought that it looked cheap in
2017.
Yeah. So it recovered from there, unfortunately.
Yeah.
So not that the price is terrible or anything, but just that the auto finance business improved a lot in the U.S. So yeah. Since it tripled almost or whatever, I don't know that it'd be as attractive as when I wrote it up there, but you could read those too.
Cars.com, that company's gone down a lot.
That declined a lot. We have a bunch of bank companies here. Some of them are interesting that way. You could read the write-ups of them because of the fall in interest rates. I think a bunch of them have fallen a lot. Like we could just put in Frost. I think Frost has fallen a lot. Frost is also exposed to energy, but I think if we look at like last week, I think they fell quite a bit. 80, okay, but it did fall from almost 100 to 80,
from 94.
So the P's on a lot of these aren't that expensive. Banks generally seem pretty attractive right now for that reason, because of the changes in yields, because yields moved around a lot last week.
Duncan,
none of
EM
those.
Systems, Entercom,
None of those
Evercell,
are worth talking
Oxon,
about.
Fossil, FW Thorpe,
Don't think so. No.
General Electric. All right, did you hear?
Yes,
He passed away. Yeah.
Yeah, Jack Welch died. Yeah. Game Host we have there. Here, let's check Grainger, because this is the kind of thing that if the world was expecting a big recession, like globally, if investors are expecting that, then Grainger should have plummeted. It is down a lot this year, right? So, it's year to date. Yeah. So it's down.
Gone from 344 to 282 today.
Yeah. Unfortunately, this is another one. Let's go back to that stocks A to Z and see when I wrote it up again. Lower price, higher volume, or whatever. Yeah. So I thought it looked kind of cheap.
$299.
$229.
200. Yeah, 229.
Yeah, $229. So even after coming down, we're still talking about a stock that's like 20-some% higher than where I wrote about it there. So that is a bit of a problem.
Green Brick Partners.
Green Brick Partners, home builder in this area. It's, we've talked about it a little bit before. Hamilton Beach. We could look at the Hamilton Beach and see how it's done since the spinoff. So Hamilton Beach was a spinoff from NACO. We liked NACO better than Hamilton Beach. And if you do max, you can see where it spun off to now. For people who can't see it
looked like it spun off around $33.10
rose to like 40,
went to 40. Now it's at $11,
20, and then we go from 20 to 30, 20 to 30, 20 to 30, and then lately it's now at 11.58. Well, you could check the quick FS, because on a PE basis and stuff, it should be getting pretty cheap here.
Yeah.
This does get all of its stuff made in China. Basically, and then sent to the U.S.
Showing negative PE.
So what's their operating profit situation now? In 2019, operating profit was $37 million. And what's the market cap on this thing? Enterprise value market cap. Nope, that the information is not
incorrect.
Right. Yeah. So
156 million. It says this is shown on Google, showing as 6 times PE.
Yeah, and I wouldn't trust Google either for any information. But we do remember that it was over 300 million the market cap originally on it. So obviously it hasn't done as well as NACO. NACO spun it off and it's done better than NACO. NACO's the better side of the spinoff, because the day NACO spun off, it started spinning off at like 20 something, rose to like 30. So if you take the two of them together, within a month or something, they were both at around the same stock price. Now NACO's at almost 4 times that or something. Yeah. So obviously it hasn't worked out as well.
What about Hostess Brands?
Hostess Brands.
You looked at the warrants lately?
Yes. So Hostess Brands keeps leveraging itself up. There are warrants that expire. If you're going to buy this, I would buy the warrants, so not the stock.
It's coming up soon, right?
No, it's coming up a year, 18 months from now. Okay. I think in 2021, in the fall of 2021. The problem is they keep leveraging up. They said they're going to leverage up to about 4 times again next year. Like, keep acquiring things to leverage up. I actually think they've done well in their core business, like growing their market share and stuff of the brands that they already owned, but they keep buying other stuff. They keep operating it like an LBO, wouldn't feel that safe in the stock, but occasionally there might be opportunities in the warrants. I'd watch the stock and the warrants. But now the warrants are only a year and a half.
I saw a thing come through on Seeking Alpha saying that Hostess may benefit from coronavirus outbreak for people buying like cookies and food and stuff like that.
Like stocking up?
Yeah. Let's see.
To be fair, I do want to point out something that's a misconception. It's always believed that Hostess's products like Twinkies and stuff have incredibly long shelf lives.
Yeah.
They actually don't.
Not anymore.
Yeah, they're fairly normal compared to other products.
Yeah.
So a lot of products do. But I mean, like I've got canned soup over there. The canned soup will last longer than the Twinkies. But
hey, man, they just want Twinkies when they're in their bunkers, all right?
So
Hunter Douglas?
Hunter Douglas is a stock that has obviously been disappointing for a while now. It's going to depend on where it quotes it for you in. There you go. Mm-hmm. So it hasn't moved around much at all.
58.
Yeah, that's not a big movement at all.
No.
So it hasn't moved the way that that a lot of other stocks have moved.
IEH Corporation?
Yeah, that one I've noticed that they're on the OTC Market site. Their CEO kind of promoting the business and stuff. Let's see. Well, let's look at Monarch Cement. So Monarch Cement's an interesting one. I wonder if it's dropped at all because it is economically sensitive, obviously, but it's in the middle of the country. Mm-hmm. Barely. I think I wrote up at like 62 or something like that. It's around 60. It has declined a little bit. I think that stock would be potentially interesting at like book value or below. So that's one I would look at because if we do enter a recession or something, it's likely that it would kind of fall too much because it's cement, Mm-hmm. So they would be exposed to that more than it should be, but we're pretty far from that, right? I think it would need to fall like
price of
$40 or something.
Yeah, it's 1.4 right now.
Yeah, but that can happen in a recession.
Mm-hmm. MLP.
Yeah.
Maui Land and Pineapple.
I don't think it's moved a ton, but we'll see if it's moved recently.
Oops. Actually, if I just type it in, there we go. Okay, maybe not.
And this is the world's greatest search engine.
I know. Okay, here we go. $11.
Yep, same price has been for not forever, but if let's look at like a 5-year chart or something. For the last couple of years, if you see, it's tended to be right around that price, so not terribly different. I don't know. The hard thing about all these things is, of course, interest rates are lower. So given where interest rates are, I suppose land in Maui should be very valuable. Mm-hmm. But I wouldn't think that it's changed that much. MSC Industrial Direct is another one that's like Grainger. If you were going to enter a recession or something, it's something that I think you should pay a lot of attention to. NIC, I thought was kind of cheap. Omnicom is the one we should probably go to next. Mm-hmm. So Omnicom, I think, looks very cheap. I had said once before that it would make sense to buy it at like $65 a share.
Yeah.
And actually, it's bought back some stock since it's OMC.
Oops, OMC.
So it's bought back some stock since then. It's at, what's it at now?
Let's see. It is true.
Are we going to have a call to buy something finally?
$69.31.
So anyway, that's pretty close. So I did say a long time ago when we did a podcast on Omnicom that I think $65 a share would be a great price to buy it at. That's about one-time sales. I think actually it's bought back enough stock that it's already at one-time sales. Let's look at Quick FS. So yeah, it's saying one-time sales.
Yeah, you've always said that. One-time sales.
Well, you know why. So let's look at what's the 10-year median free cash flow margin.
10-year median free cash flow margin, 10.8%.
Right. So you get an 11% yield in terms of free cash flow on each dollar of sales. Mm-hmm. So if you buy the stock at sales, you're in theory getting an 11% free cash flow margin. You're getting 11% back on your purchase price, and they're paying a lot of it in dividends and buybacks. So let's look at like the dividend and stuff, what the dividend yield is and things like that. You'll need that over on there. So the dividend yield is what?
3.75%.
Right. And the rest of it they use to buy back stock. So you're going to get almost a 4% dividend, and then you're going to get a 6% attempt to buy back the stock if it stays at these levels. So that would make it really attractive. I don't know if you have to wait for $65 or for now, but if you look, what are the problems with Omnicom? So if we look at the Quick FS, they have not grown their revenue. Now, they did dispose of some things and stuff, but they basically haven't grown their revenue in like 5 years or something, right? So that's a problem. And then the other problem that they have is that if we were to enter a recession or something, you would see a decline. The stock might sell off a lot. Yeah. So the stock might sell off a lot, but at any price of sales or lower, I think it's attractive to buy something like Omnicom. And if you like their capital allocation the most of buybacks and dividends, then I would definitely focus on them versus other ad agencies. But all the big ones, I think WPP, Publicis, Omnicom, Dentsu, all of those, Interpublic, all of those I think are fairly cheap and have declined a bunch recently. So that's very rare to have a stock that you could buy at like 10 times free cash flow. So that one's attractive, definitely.
Let's go over. Let's see. We talked about Progressive.
Yeah, so Progressive. We'll look at Progressive. Let's see what the stock did on Progressive. Progressive is an insurer. A bunch of other insurance stocks fell, but if they were falling for the reasons that they should be falling, then it shouldn't have affected Progressive. Let's see.
Not really. We went from $83 to $77, trading 14 times earnings.
Yeah, let's just look at the last 5 days or whatever. Let's see, or month or. It did drop. So just like any stock, it did drop.
Yeah.
It dropped almost. What is that? Not as severely, but it could have dropped at one point close to 10%. So why I was saying it shouldn't matter as much as other insurers go out longer in terms of interest rates. So they own like longer bonds and things. Progressive goes very short on the investment side and it's all about underwriting. So really it's just where we are in the underwriting cycle that should determine their earnings more. I mean, not that the yields didn't also drop on very short-term things, they did, but just how that matters over time isn't as important if you're putting all your money in like T-bills and stuff, which is more compared to other insurers. Progressive pretty much is doing that. They're the insurance equivalent of just holding a lot of cash.
Residio Technologies.
Yeah,
This company's gotten cheap.
We can look at
Last
that.
time I looked at it.
No spinoffs have been working very well. They had some problems that they talked about, and I didn't like what's happened since they spun off, basically.
What
and
did
I didn't
you
love
like?
them that much anyway. I mean, we didn't consider buying them, just like we didn't consider Hamilton Beach. So I think that their ADI distribution business is good and working well, but the business that makes like thermostats and things and then sells into the U.S., assembling them in like Mexico and stuff, I don't think it's been doing as well, and that's a big part of the business. We can look at Psychomedics, see if that dropped at all. That's the kind of thing that unfortunately may not have dropped at all. It has a pretty high amount of, let's see, okay. So last 5 days, like as an example, I think Tandy was up last week.
Really?
So Tandy Leather, yeah. So there are things that just don't react very much to the new, like what is that? Okay, flat. But it was up at one point. It was up 10% at one point during the a week in which the market was down about 10%.
Yeah.
So it does happen sometimes that these small companies don't move that much with the market. And unfortunately, that's what you have with something like Psychomedics, which would be more attractive at a lower price.
I wonder how Sydney Airport's done.
Okay.
Not Snyder. Sydney. Can't type. Okay. Yeah.
I would have expected a
More.
bigger decline in that.
Yeah.
Yeah. Oh, except how we're quoting in Australian dollars too. So to be fair, they make their money. Yeah. Anyway, I don't know how far the Australian dollar fell against the US dollar last week either. I assume it fell, but I don't know that. I don't watch currency markets. Cheesecake Factory. That one I think might be getting interesting. Let's see what the price is on that one. 35. I think we talked about that before.
12
35
times
being an
earnings.
interesting price for it. Let's look at Quick FS to get an
Yeah,
idea.
it was at 42 before the fall.
Yeah, but we did talk about that on the podcast, right? Didn't we?
Yeah.
Yeah. So, yeah, I mean, if you look, the free cash flow margin, but here's the problem. You get a free cash flow margin with Cheesecake Factory of about 6 to 7%, right?
Yeah.
And it's trading at 0.7 times sales. So that's actually pretty close to like Omnicom trading at 1 time sales and having a 10% or higher free cash flow margin. By the way, with Omnicom, the tax rates have been cut since then. So on average, their free cash flow margin might be more 11 or 12% or whatever. So really attractive. Cheesecake might be too. But of course,
Cheesecake's capital allocation is different, though, than Omnicom.
that is true. Although I think their capital allocation has been very good, to be honest. Cheesecake Factory. I think they're willing to buy back more stock and things than other companies like them would. Let's see. I don't think that a lot has happened.
What about
with
US Lime?
We could look. I think the stock unfortunately went up a bunch since. I thought it was not expensive, but my reason for not picking it, yeah. So I think I talked about it I don't know if I talked about it $65 a share exactly or what. I like the industry a lot, the Lime Rock business, and so owning a lime quarry and turning into the different things that they do. But obviously, it's kind of been expensive for a while here, you know. And these aren't like. So it's a cyclical company. So 18 times PE isn't bad if it's just like a cement company. If it's 18 times like the bottom of the cycle earnings, then I'm happy to pay that. My concern is more like I don't want to pay 18 times basically one of the higher ones that you're ever going to see for them. Yeah.
What about Zooplus? That's a company I haven't even looked at that in a long time. I remember a lot of people on FinTwit
It's very
like
popular
that.
among hedge funds and things, especially European.
Yeah, a lot of people love this stock. I remember a couple years ago.
Yeah. So it sells a lot of dog food through online sources, kind of like Chewy of Europe. Chewy is owned by PetSmart, which went public again. So weirdly, I'd written up the company stuff before it went private, and PetSmart, and now it's gone public again. That's not the first time that happened either. So when people ask about, like, is the market getting more efficient?
Yeah.
The problem is always private equity firms are the worst kind of competition because they're the ones that are more likely to buy out things that we liked otherwise. So
What about Cars.com? That was a spinoff.
yeah,
We looked at that years ago.
we did and didn't like it, like most of the spinoffs. So
Yeah, I know the stock has fallen.
yeah, it's hard to come up with a spinoff that we've liked recently.
Oh, wow. Down 13% today.
Yeah. So that has been a consistent problem. Although we buy some things that were the other side of the spinoff. I like BWX Technologies. I like NACO. So sometimes we take the other half of the spinoff or whatever. But the part that's spinning off, we haven't liked as much. We didn't like Hamilton Beach. Hamilton Beach could be cheap now, though. I'd have to look. It's very possible. I mean, it's fallen a lot. I think the last time I looked at it, it was like $17 now.
Yeah.
I'm saying it's like 12 or something.
Yeah. It's fallen a lot. What do you think? So why do you think spinoffs have just performed so terrible? I don't know. I was
know
gonna say
taking them together if they have.
Yeah, like as an index.
But
yeah.
the things that we've looked at have it not done well, and we've wanted to pass on them. I think that has become a much more, I don't want to say a much more efficient market, but it's much more that companies know that people like spinoffs more. So they're willing to use it to their advantage, put a lot of debt on them. It's been easy to do that. And then
get a little parting gift.
Yeah, they all spin off with like 3 times the EBITDA and debt. And then I think that value investors like bid them up immediately and stuff. Value investors seem very focused on spinoffs, very focused. It's one of the areas that they're most attracted to. And also then I don't know if all of them are very focused on like sticking with the business long term.
Remember we looked at Cerence kind of briefly.
Yeah.
That was a spinoff.
That's a spinoff that we passed on to. They were
doing like AI and stuff like that, automation in the car and stuff like that.
Yeah, the investors didn't seem too excited about that one. I don't know if that's one that we'd look at. We tried to do something where we thought about like regularly covering spinoffs and stuff.
Yeah,
but I just haven't found spinoffs to be a very interesting part of what we would do
like
for our own
flow
investing. So it's been hard that way. I don't know if in a different kind of environment it'll change again, or if this is something that because people are so focused on it, it gets lots of attention on blogs, on value investors.
Yeah, totally.
It does get a lot of attention, more than it used to, I think, spinoffs.
No, definitely. Well, our goal is to continue to add stocks to the stock to A to Z section. Again, like we talked about, it's best to do due diligence when and constantly like studying new companies when the stock market's hitting all-time highs. So when there's volatility in the markets, you could go back and revisit your research, see what you thought about it, and then act decisively when the opportunity comes. But if you do become a member, you do get access to the Stocks A to Z section. This gets updated weekly when I do send out the new Constant Contact email. So if you do become a member of the website, be sure to check it out. Like I said, we did simplify everything, and you could add your idea on the idea exchange, and it will get linked in here as well, which is a lot of fun. And members like that aspect of the website. Well, I want to thank everybody so much for tuning in with Geoff and myself. We are going to be in Omaha the week of the Berkshire meeting, as long as it does still happen, week of May 2nd. So if you're interested in our money management services, either through the fund or the SMA, reach out to me at andrew@focuscompound.com. We will get you on the schedule to meet up in person. We love to chat. If this is the first time you're tuning in, hit that subscribe button, thumbs this video up. Leave us a rating review on the podcast side of things on iTunes. That goes a very long way for Geoff and myself. And if you do sign up for the website, use the podcast promo code, which is podcast, and they'll take some money off of the price every single month. I want to thank everybody so much for tuning in with Geoff and myself, and we will see you in the next podcast. Hey, this is Andrew Kuhn, and that was the Focus Compounding Podcast, the podcast where Geoff and I talk about actionable stock ideas, investing concepts, and the overall way that we think about investing at Focus Compounding Capital Management. Go to focuscompound.com and enter in your email to get a free watch list from Geoff every other week. And be sure to check out all of our other work where Geoff writes about stocks at focuscompounding.com. I upload how-to investing videos on YouTube, and we both manage capital for investors at Focus Compounding Capital Management. Thanks for listening, and be sure to subscribe to follow along.